So we got 3 clues. Those 3 clues are pretty simple, and let's take a look at how we use those clues to make our money today. The first clue we had this morning was that bull channel, right? The bull channel reminds us, sell the highs of the bull channel. Do not try to force a trade through those highs. The second clue we had was an outside day. An outside day says buyers are in charge, buy pullbacks above the previous highs. If we go below the previous highs, I'm going to be selling below those previous highs. And the third clue, mark up your A, mark up your B. That shows you where C will be. Where are we? We are above the C. That will be a magnet now, bring price back down. And of course, we'll be waiting for the option here to buy those lows, possibly tomorrow, later on this week. So 3 clues, and how do we use those 3 clues? Well, first of all, outside day tells me expect price to keep going higher, but I'm at resistance. I'm at resistance, the highs of that bull channel. So I'm going to sell the highs of the bull channel. I'm expecting price to come tumbling back down off that bull channel, then giving us a buying opportunity at the lows of that channel. So we put together a pretty good plan of attack. And do you also recall what the dollar was doing too? The dollar now, right? The dollar now was trading right at the lows. And remember, what is the correlation of the dollar? It's a negative correlation. When the dollar began to rise off those lows, that's all we needed at the top of that bull channel with the C price magnet below us. The previous high of day just begging for those buyers to fail so we can sell below the previous high of day. We knew one thing was for sure. We were not going to be trading the long side. We knew one thing was for darn sure. I was not going to try to force those trades right up to those highs again like we've been so unsuccessful in the past. So sell the highs of that bull channel. And remember, we talked about this today. The dollar was the variable. The dollar, right? Get that dollar to come off those lows. And we knew yesterday was a great example of how effective it could be by selling those highs. Today, another great example of that. So at 8 a.m. Eastern time, we are right there at those highs. This is a great trade, a 2-step pattern short. Everyone took it with me. Nice, easy winner for 20 ticks. At 8:20 this morning, remember we had no 8:30 news. The news was until 9 o'clock. So we knew we had some time this morning, wanted to sell those highs. Obviously here, I would have kept going lower here if it would have given it to me, but we didn't have any more patterns to get into. Price comes back up, and by this time, now it's 9 o'clock. So I'm going to slop around 9 o'clock news. Remember, that's Case-Shiller home price. We go back up, and we fail. When we fail, new lower low, sell retracement, another 15 more ticks. All right, now we're talking. Sell the wedge highs. I'm sorry, sell the channel highs. No wedge yet. Wedge is coming soon. We then go through 9:15 to 9:35. Right? By 9:15, we're sitting on hands through that U.S. Open. You can see we're kind of right in the middle there around the BMT. Not a bad idea to sit on hands there from 9:15 to 9:35. And then sure enough, we drop again. Remember, I'm coming off those major highs. I am selling, 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 while the dollar now is rising off those lows. By this time in the morning, we're going, this is great. We're finally getting this dollar to come off those lows, and this thing's going to tumble. Didn't tumble that far, as you can see. Wave pattern short. There were a couple different entries there. I grabbed 23 more ticks. So by 9:30, much different than we saw yesterday, right? Yesterday, we weren't trading until 10 o'clock. By 9:30, I've got 20, I've got 15, I've got 23, right? Not a bad way to spend the first hour and a half of your day.